So, welcome to part two. Here we're going to be looking at sort of what's coming out this week. So, let's take a look. So, there's a couple of central bank meetings and lots of speakers again. It's PMI week, so a lot of countries are issuing their PMI. So, it's good to see that because it gives you a bit of insight into sort of what the views are regarding economies. But of course, geopolitical issues are going to remain the main focus and probably for some time actually. Okay, so when we look at the US data that's coming out this week, we've got GDP. That's expected to come in round about 4% year on year, which is good, almost double what was expected earlier this year. But their economy is just still really strong. And of course, as I mentioned, PMIs are out. So we've got PMI, then we've got Richmond Fed Manufacturing Index. The Fed's favourite inflation indicator, PCE's out this week. Durable goods. Now, durable goods, they give you a little bit of insight into what, sort of consumers are spending and if and what they consider comfortable with spending, because durable goods are usually the bigger ticket prices. That's when they're buying sort of things for hundreds and hundreds of dollars. Something that's durable goods has to have a lifespan of at least 3 years, so it doesn't include food or anything like that. And then housing data's out and Michigan consumer sentiment. Consumers, we account for 60 to 70% of an economy. So it's really important how we feel about our earning power because that impacts our spending. When we look at the EU, PMI is out. And of course, we've got the ECB rate decision. Now, if you looked at the minutes that was released recently, there was split views from the last meeting. So, we can expect more of that probably from this one. In Germany, the Bundesbank have their monthly economic report being released. Consumer confidence, as I say, that is so important. For me personally, I think it is anyway, because, we account for 60, 70% of an economy. If we don't spend, if we decide to say, well, we can't afford to spend, that pushes the economy lower. And then we've got the PMI out, IFO, GDP and retail sales. So quite a lot from Germany. In the UK, not so much, bit of jobs data and PMI. Canada, we've got the housing data and we've got their rate decision as well. Bit of mixed sort of data from them, so it'd be interesting to see. I think most central banks are probably looking just to hold for the moment. And they've got at least one more rate decision to make this year, so if they don't do something now, they've got that flexibility of doing that by year end if they feel they've got the need to. And then of course Japan, still negative rates. Okay, it's only negative 0.1%, but they're the last country to have negative rates. And they've got CPIs out, their PMIs out as well. And it is really at the moment their inflation is higher. It's just because the government's subsidising some of the energy that's sort of keeping it even where it is, which is still above that 2%, more around about 3%. In Australia, we've got CPI and PMI coming out, and in New Zealand, again, that all-important consumer confidence. So that's it for the coming week, but just listen for news around what's going on with Israel and the surrounding nations. There's lots going on in the background there, lots of phone calls, lots of meetings. Last week you saw lots of head of states head into Israel to show their support, but there's a lot of tension in that area, and it could easily escalate very quickly. So it's going to depend on what Israel decides to do, how aggressive they are when they finally make their ground assault and the rest of it as well. So yeah, so it's a little bit of just tension. I mean, you saw that. I mean, gold had a big move up last week. Uh, it went back over 2,000 on Friday at one stage. So again, it's just showing that people, looking maybe to take a little bit of that risk off at the moment. You also saw stocks coming off. And again, if you've been listening, especially my macro outlook over the last weeks or months, that I've been favouring moving more more from portfolio of holding stocks into fixed income, putting your money on deposit. You've got a guaranteed return there unless the country goes bust. So, of course, if you're going to invest in another country's bonds, always remember you do have that extra risk of the exchange rate. So make sure you protect yourself there with a hedge. So that's it. So next part 3 is where I give my full macro outlook. So sort of, yeah, but I mean, we've got lots to look forward to this week. It's going to be a big week. It's going to, it's certainly going to have some guidance of where things are heading with both the FOMC, so the Fed effectively, and the ECB both deciding on rates, but also, hopefully giving us just a little inkling of some forward guidance of what their expectations are. You've sort of got rates going up at the same time that the risks of recession. But, as I've said for quite some time, I think at the moment that's acceptable. And it's in part of the central bank's plans, but I'll cover that in the macro part. So just to highlight our services, daily newsletters full of headlines, global news. You can get them either direct from us or we do post them on LinkedIn as well. And then if you would like to subscribe, we offer fresh daily chart levels, which includes daily pivot points. Then we offer anything from one-day workshops, one-week courses, and also our comprehensive accredited masterclass. So, whatever level you're at, we can help you to improve and, hopefully help you to get where, your goal is when it comes to trading. And then to also help with that, we do trader mentoring. We consult to companies to help them with their exposure on FX and commodities. We provide lots of educational content, individuals, exchanges and brokers. If you're looking for a funded trading account, then check out our partner at Nordic Funder. They offer some great ones there, and of course you've got lots of sort of different parameters that you can add, and there is no time limit, which is really important. One of the reasons, a major reason why we were happy to partner with them. And if you've got any sort of reason to contact us, you'd like maybe a bit more insight, or you'd like to find out more about our courses and such like, then contact us at info@symaxfintech.com or direct to me at chris.tubby@symax-int.com. Now on the 17th, next Saturday, so the 17th of June, I will be in London. If you're around, then there is a traders event going on, Traders Day Live. If you want information, again, just reach out to me and let me know. But it'll be a great day. There's going to be a lot of experts there. I'm doing a presentation. I'm also on a trading panel of experts where we're discussing sort of our journey so far in trading. So it should be a good fun day.